I'll do it again just in case. And we should be live.
Yeah, it tells you in the top left corner. You are live.
Yes. Brilliant. Thank you.
No, that's fine.
Just wait for people to come in.
Start getting yourself set up and all set. Like I say, I'm watching it on the other screen to see what the delay is as well. So I never noticed the delay was that big, to be fair. Will's there. Easy, Will. How are you, mate?
Hello, Will. How's your weekend been?
See, I can't tell on mine how many
Viewers.
people are in.
Yeah.
Whereas you can. Big up the boys. How are we?
Right, we'll put this up to begin with because it's what the title's around, the market melting on Friday. But I feel like it's had a bit of a turnaround over the weekend.
John flexing his watch.
It's £25 from duty free.
To be fair, I was speaking about this just not long ago with Will, to be fair, so Will has just mentioned it. Have you seen that there is CPI data this week? Have you seen that?
For America?
Yeah.
I've seen it in the weekly shout. It'll be interesting.
Yeah, so I was quite surprised that there is any data, but it looks like if they want that out, then obviously, like Will was saying, I was thinking the same thing. It looks like it'll be bullish because that's why they'd want that data being shown, wouldn't they?
Yeah, they wouldn't put that out if it wasn't positive.
Yeah, exactly. So that's bullish for rate cuts the following week.
Is that the week after, is it?
Yeah, not this week, coming the week after. That's when we got
that's
FOMC.
The one thing I need a clue up on more is like the financial calendar, really.
Yeah, definitely. Yeah. There's one of financial calendars in that book that you was on about, just there's one in there. You can see everything on there, so you'll be able to see everything that's coming up.
Yeah, I'll get that up just in case there's anything, because we can talk through that.
Yeah, because it'll show you everything that's coming up over the next month and stuff, so that you need to look at. Yeah, Will, I agree. How we doing, Leo? You all right, mate? Welcome, mate. I agree, though, Will. They definitely want JP to act on it. They need something to push it over the line. It's already been hard work as it is. Have you never seen this one, Scott? There's two. There's this one and the other one that we use. That they fear and greed. I like this one because you can see the crypto on it as well, so you can flick between crypto and stock market, which is good.
Yeah, I like this one. And I'm not in any like crypto at the minute.
I didn't notice that we was only in fear, to be fair. I still thought it was an extreme fear, so I didn't notice we came out of that Friday.
Yeah, I think the sentiment's weird, a little bit better over the weekend.
But like I say, I'm not sure how many people seen, but I've just posted it in the chat about the sniper's nest or hunting nest. I have just posted. That's crazy. That is people trying to take. Yeah, that's it. It's crazy.
That's crazy. So they're trying to take them out.
Yeah, it looks like it. FBI investigating is described as a hunting stand with direct line of sight to where President Trump would exit Air Force One. It's crazy, that is. How's there even something that's, you know what I mean? It's nuts. How do you know exactly where that plane's going to be?
It's crazy. Nothing else has come up yet.
No, it's quite fresh, that was. I was about to say it's...
J.D. Vance is getting impatient.
Wow. Meme stocks in video and Amazon. It's criminal, man.
Where was I at?
Yeah, my phone's got so many notifications for X now. I've got loads of stuff set up. It's just, I woke up the other morning to 109 notifications off X.
I was saying earlier to my girlfriend, I was like, I've got to keep on top of YouTube. There's Discord, there's TikTok, there's X now. I don't know how I'm going to have all the time in the day to keep up. Because Twitter finance moves quick, is what I've realised.
Yeah, this fear and greed, though, I prefer this one compared to the other one. I forgot what the other one's called, but I use both, to be honest. But I think I'll use it on dark mode as well. Let's have a look. Yeah, dark. I didn't know you could use it on a light mode, if I'm honest. Mine must have been standardly on that. As if done the meme stocks as that Beyond Meat is one very skeptical. I know they've got a load of debt and stuff. I'm just looking at it on my own screen now. But Nvidia and Amazon as meme stocks is absolutely criminal.
What have they put?
It's no good.
Nvidia and Amazon.
Yeah, look.
And the S&P 500.
Yeah, it's criminal. That Beyond Meat's I don't know too much about it, but I know the short interest is something like 40%.
Jesus.
I know, I'm not sure how high it is now.
Well, the liabilities are high, double the assets. So that's brilliant, isn't it?
You'd know about this one anyway, wouldn't you, John? It used to link to McDonald's and stuff.
Yeah, so they made the vegan patties. So it'll be very interesting to see what they're doing if they do go under.
They'll probably get some type of bailout. Is it a US company or?
Good question. I imagine.
I'm not sure. I only heard about United States. Yeah.
To be fair,
I believe HIMS is 35%. Is that what the short interest got? If you believe that, yeah. But I was about to say it used to be. It was higher than that when the hype, if you want to say, was happening around HIMS. I think it was 44% at one point when I looked.
Wouldn't it be good if they shorted on trading 2-on-2?
What, the short interest?
Yeah.
Yeah, I know. It's on Yahoo Finance and stuff though, so
that's one of my favorite websites to use when I'm looking at stocks.
What was that Beyond Meat's ticker?
BYND.
Oh, BYND. Yeah, Beyond Meat. Let's have a look. Statistics. Share short 39 short ratio. Oh yeah, share percent of float that's short 54.01%. Over half of the shares are being sold short.
Oh, I've got it on here. I didn't realize stock analysis showed it.
When you're showing that screen, John, press Control and zoom in just a little bit because then it zooms in a little bit on the screen. Yeah, there you go. People can see it a little clearer then.
Brilliant. Thank you.
Have to do that. Yeah, short percent interest there. Look, 51.58%. It's crazy, that is. If it starts to run, that's going to be a right squeeze.
62% of the float is shorted.
There you go. So it's about 50-60%. And I always use Yahoo. I do. I feel like their numbers are the most closest they're going to be.
So shorting is just getting out the stock to get in lower.
No,
I don't actually. No.
So shorts is where people are taking a short position against the stock, thinking that they're going to get the stock to go down. The best way to look at that is, what's that film about the GameStop? Dumb Money. Dumb Money is probably the best thing to watch to explain what a short squeeze, like what the short in the stock is. But obviously, when people are short in the stock, it's mainly institutions, really, but obviously it's the individual investors as well. But yeah, it means that they mean that the stock's going to continue to go down, and the further it goes down, the more money they make.
I've never seen that film, so I'll have to add it to the list.
What's it called? Mate, watched it the other day. It's class. Ben mentioned it last time I was on stream, and he said he'd watched it, and I watched it, and it's all about that GameStop and stuff like that stock, and yeah, it's a really good film, to be honest.
That was insane. That
class film. It's funny as well. That's what makes it good.
Oh, I need to turn that little.
I think you got a few people in there, ain't you? So a few people have come in. So
yeah, I want to know what stocks people have been looking at. Have you been looking at anything new?
Yeah, so I did obviously my update. Picked up some Hive. Started looking at some Hive. Obviously
that's been mentioned on my new upload.
Yeah, so obviously we've got. I'm just pulling it up now. So there's obviously M5, who, on X, speak to him quite a bit. We was talking about it's called FIP, so FTAI infrastructure. It's railroads. So I've started picking up a few speculative stocks while we're in this run market. But surprisingly enough, it finished up on Friday. Railroads did. So we're already up by nearly just over 4% on that position. But I think it's only a short term, really, one that I'm looking at. But yeah,
only one of my investments finished up on Friday. Can you guess which one it is?
Marks and Spencer's one. I seen it in the video. Yeah. To be honest, on Friday, from where we're at now, after hours, like I say, everything near enough was up, finishing after hours. But I mean, PayPal started to make a bit of a recovery, back up to 67. Obviously, still a little bit under the average. It's Ondas that's obviously taking a bit more of a beat, but at the moment that's just obviously being pulled down by algos and stuff. We're seeing 1160 2 weeks ago. We're sitting at 773 now. But it's important you look further out because 3 months ago we're sitting at 3 months ago was at $2 a share still. So
I think that's the biggest thing is when I see a day like that, I just instantly click 1 year.
Even a month ago, we was literally still around the 6 mark, and it's still 773 now. And obviously, with earnings coming out, I think it's gonna run. But like I say, year to date, it's up by 744%. So,
are you gonna cover the earnings?
Yeah. So obviously, I'm gonna try and get Eric as well to do a bit of covering either on Q3 or Q4. I'm gonna try and that depends how busy he is because this side of the year is obviously crazy for him. But I'm gonna do a lot of the earnings reports this year myself. So. It's one
good.
of them.
Jake said, "Yeah, thoughts on the China situation."
Sure thoughts, John.
It's just all the game, really, isn't it?
Yeah.
Realistically, they're gonna come to some sort of deal because they go hand in hand with all the trade. Trump just is obviously bluffing to try and get the best deal for America. But I don't think is it G? Is that how you pronounce it? I don't think.
I'll say it wrong, but it is.
Yeah, I don't think he's gonna screw his country over either by being harsh because it affects the rest of the EU and the way people react to Chinese exports. So, yeah. What's your thoughts?
The thing is, with China and the US, they you pronounce it's 11, yeah, XI. The problem is with China and America. The problem is they need each other. One country's is obviously well more advanced in the rare earths, which obviously is something there, but the other country's so much more pushed in sales and domestic sales, etc. So they need each other from a consumer point. But obviously, Trump's a businessman before anything else, so he's always more aggressive with it. But obviously, you don't really see much more come out from them guys. They're a bit more quieter. But yeah, I think they need each other. I think a deal's on the table. Neither of them wants to push. Yeah, like Will says, they can't decouple from each other. It just doesn't make sense. So
it's too interlinked, isn't it?
But you've got to think about it from both points of view. You've got how both economies are probably taking great advantage of this. What people don't talk about. Everyone always talks about the Bitcoin longs and all this and shorts, etc. Both countries are be doing these types of things and making a shitload of money off it on the back end of it as well. They ain't stupid. So, but yeah, I think in the next couple of weeks, they've got a conversation in 2 weeks. I think it was back end of October, so probably next week. They've got a meeting at the APEC meeting, I believe it is.
Yeah.
Obviously, the problem is you've got the Zelensky and Putin meeting as well. I believe this week, maybe next week.
Is it not next Friday?
Yeah, so we've got a lot of stuff going on. I think Trump's just pulled funding out of a state in America as well because of something or some. I've seen something this morning. There's been so much news over this weekend. Trump just don't stop, does he? He's relentless. No. Someone who runs a country though, and I've seen Amit talk about this, and I think it's important to say, what other president do you know that's giving that much appearance? That is like it's like a reality show a little bit, but at least he's transparent. He could be doing all this behind closed doors and not saying a beat.
Yeah, like from our government, you don't really get anything, do you? You get little drops, and then that's never the case.
The market's just really fragile. It reacts to literally anything and anything that's said. So it's but you got to seize those opportunities as well because people in a couple of years, especially on the back end of a bull run, they're going to start going, oh, well, I wish I had those opportunities to buy again. And then it comes down and then people panic and don't buy it. And then it goes back up and goes, oh, I wish I bought again. Well, buy it then. Buy the dip. So,
just keep buying. If you're that convicted, you will just keep buying.
Like I said, I had 10% of my portfolio was cash. It's not anymore.
Is that in your general invest or ISA or just altogether? Both.
Yeah.
It's gone.
Yeah, so yeah, Leo, he did say it was going to be fine. But like I say, we have to make sure you learn from lessons. And in April, I think I've seen loads of tweets saying tariffs were being lifted. And then like an hour later, he'd be like, I never said that. And then it come crashing back down again. So I don't believe anything unless it's through Trump's account, and I don't believe any deals in place until it's been signed off by both sides and it's in place. But there's a lot of uncertainty over the next couple of weeks. It's just a shame where it's came, but it doesn't seem like it's coincidence that it's happened right before earnings season. And I think I've seen it earlier, 10% of the S&P companies reporting earnings this week. Banks smashed it last week. If this week goes really good, it's got to be good sentiment for the market.
Yeah, and I think personally, I think it will go well.
Yeah,
I think the banks are doing well. The opposite side's going to do well.
If I'm honest, as a sector, I do think personal opinion, think it'll be mixed bags, and I think that's data centers. I think the Bitcoin miners / into data centers, I think the margins aren't going to be anywhere near where they're supposed to be. I think that's where you're going to see the struggle. I think it's too early for them to be of a transition, but that's my own opinion. I think people like Nebius and I think IREN will do good, but again, I don't think they're going to have the margins that people are expecting. And they've got someone asked me the other night. They sent me a message. They said, "Jay, do you think it's still a buy?" And I said, "I mean, where do you see it going?" But firstly, they've got a lot of share price to grow into yet, because that's ran a long time. And same with Ondas as well. Ondas have got a lot to grow into. These earnings could be great, fantastic, but they've still got a lot to grow into now. When a stock multiplies by over 100%, you know what I mean? It's, yeah, like Will says, Nebius and CoreWeave are clearly, yeah. And what people need to remember as well, because Trump said this already, CoreWeave, US stocks will get favoritism of chips from NVIDIA and stuff.
Yeah.
So people like CoreWeave and stuff are going to get the stuff before everybody anyway. I know Nebius have been told that they're going to obviously get theirs as well as a partnership there, so they get theirs before everybody. But the thing with Nebius as well is they're able to use their current tech twice as good as anybody else, which is obviously good as well.
I think IREN's an interesting one though, because they've obviously got that preferred partnership with NVIDIA for the Blackwell. Is it the Blackwell chip?
Yeah.
And they already have that infrastructure there. It's just whether they can do that transition correctly. I think it's to do it.
So I looked into that because someone mentioned it to me, and I tried finding a list. So with NVIDIA, there's a couple different groups across the board. So basically, you've got a gold group, which is like priority, you're top of the top. Then you've got partners. Now, what I noticed about the partner list when I was looking into it is it just seems to be anybody that buys it from them.
Anyone.
So I think if you buy them from there, you're an NVIDIA partner. Do you know what I mean? But obviously, what people have obviously got to realize about IREN and stuff, which I'm not sure, so I might be corrected on this, is NVIDIA's got money in Nebius, CoreWeave, all these types of people. They invest in a lot of them. I'm not sure if they invest in IREN. So obviously, they're always going to prioritize their own assets to making more money on their own sheets. So yeah, and what Will said right there, look, everybody, I'm starting to realize that everyone has a partnership in some sense with NVIDIA, and that's the case. They've got so many fingers in so many pies. What I personally think with IREN, I think it's going to be a great stock. I think it's going to fly. I think it's well overpriced at the moment, but obviously that's just the way the market is. I think it's running hot, and I do think it is going to pull back a bit. Like JP Morgan said, it was overpriced at 36. After that,
60.
It ran to 68 this week, I think it was, or something. You'll have to put it up on your screen and have a look. If you just put it up on try and talk to share screen, I'm pretty sure it ran up to like 68 or something. Yeah, and
69.
Yeah, that's what I mean. And it's, you have to ask yourself, but people, this is the problem with a lot of stocks, and people will always say, they're like, oh yeah, but it's the next Nebius. But you got to understand where Nebius has been. Nebius isn't just Nebius. You got to think about the arms. They've got ClickHouse, got Toloka, they've got the Bezos investments, they've got all this stuff going on. They've got, I think it was 79% margins on last earnings, which is nuts. They've just got the Microsoft deal. You've got OpenAI saying obviously they're going to be looking for even more computers. There's a case that might end up coming. You've got Shopify, who's a massive customer with. Do you know what I mean? There's just so much going on with Nebius, and the problem is with IREN. What I really don't like, which is a red flag. I say this loads. We don't even know who the partners are. You don't know one single partner, so you couldn't even say what it is, what it's going to be. So it's hard to. I don't like it when it's not disclosed like that.
Yeah, and obviously I got impressed when I was looking into them for my video that I uploaded, where it was like they're making 7 million per year now in revenue from the AI infrastructure. By the end of Q1 2026, it's going to be 500 million. But they haven't really announced any huge deals to warrant that. Whereas you look at Nebius, and that's 17.3 billion over 5 years.
And I think as well, the ARR as well, the annual run rate, I think IREN's was like 700-800 million or something. Now, Nebius only had theirs at $1 billion. And when you look at what Nebius have got on the plate and what IREN has, I don't think you're going to hit it. And the problem is, it's with data centers, this is across the board. it's very important that they keep capitalizing on everything that they say they're going to do, because the momentum's building in because of what they're saying that they're going to do. If they don't carry on doing those targets, guidances, and everything else, then it's going to be a big problem. And like Scott said there, he said it's running hot unless they get a wham deal, then it's moving up 50%, which is exactly what happened with Nebius. I said it would be 80 by end of year. And let's say Microsoft never came, it was 80 by end of year. It was 80 to 100. Microsoft made it fly. So, and like Will says as well, their Nebius management are super experienced. Like literally, I think they've got a 10-year, like between the team of like 15, 20 years. The only thing that ever made me skeptical about that was that I'm not going to say Arcadia. I think he said his name is Russian, and so I thought they might run into some walls there, but it appears not.
So that was good. Fine. Yeah, I've just got Nebius up now on my screen.
Have you had a look? Have you had a look at Hive yet, John?
I haven't. It's on the list.
So Hive looks really, really promising, and it looks really good. But what I don't like is, not that they're Canadian, that's not the problem, but they're all Canadian. And on the presentation, they were like basically mocking, saying that they were bigger than Iran and all these companies, etc. on this chart. Now Iran's surpassed it tenfold. So now you look a little bit stupid. Feel like there was too much gloating and stuff, but when you read through all the nonsense, it looks pretty solid, to be fair, and they don't look like too bad. Still going to be mining Bitcoin quite heavily. Still going to be doing data like they're doing the data centers and that. So it'll be an interesting play for sure, to see where it goes. But it was very, very speculative for me, and I only got in because it was like 5-6 a share. If it was 20-30 a share, I wasn't getting in. I don't see it getting as high as the Nebius and that anytime soon, but I think there's some growth there for sure.
Yeah, I'm just looking now, see if I can spot any red flags in the finances.
I mean, I looked, and the finances didn't look too bad. Debt's always a thing in these types of things, but I think the debt was low, if I remember right. That's what it's always a thing that speaks out to me.
Long-term debt there, 8.2.
Your ratios will be a little bit different on that site. Is that what is? How does it work on ratios on there? Is it like what is that the amount or?
That's the amount, but I can go at the ratios. So if you look at the
I'll work on the ratios or the debt to equity ratio. See, look, next to nothing. Look, that's what always speaks out to me. And obviously, when you're a data center player, but if you look at Iran, is that Iran's or Hives? What's Iran's?
That's Hive.
What's Iran's debt ratio?
0.5.
Which isn't too still bad, but they're half reliant on debt to equity. So, I mean, that's where your problems come when you want to keep expanding, because you're going to run into those problems. Nebius's was really low, but obviously
0.3.
Yeah, so that's what I mean. And they had none. So, and they're only 0.3. And look at the size they are now. That's the problem that you're gonna have a look into going forward. But as long as Iran can keep up with it, but I feel like every stock that does good, there's always got to be another one that people have got to put them up against each other, next to each other. So it's a big pedestal for Iran to be on.
Someone, I think it was Scott earlier, said he's looking into BZI.
Yeah,
have you seen that one before?
No, I ain't even bothered looking into it, to be honest, but I've seen them talking about it. There's too many stocks. My watch list is too much, man. I've had to start my own vault now to start keeping all my information.
Yeah, I've got like 5 watch lists just on Trading 212. And then I've even got ones that are like that I discover through work. You know, the little niche ones that come through, and I'm like, oh, I've never heard of you before.
That's what I mean. I've been locking up quite a few on the watch list lately. It's they've been stacking up for sure. But I'm not sure if there's anything else. I mean, the energy plays are there, but it's just like, I mean, look at the rare earths last week. They went through the roof, and then all of a sudden the deal's coming in. It went really down. So
that was people taking profits at some extent.
Yeah, and you got to be careful you don't get trapped in a hype, because you got to worry about, like, I think that nuke. Have you looked at that nuke yet?
No.
That's a fantastic example. So nuke it's not a bad looking stock, but last year I shared a link and I knew I'd heard of it, and they had £4,000 on the balance sheet, $4,000. That's
Jesus.
It. And obviously they've only got really small float of shares, something like 50 million or something. And one guy owns 5% of that on Twitter. Like, he owns 5% of those shares, and he pushes it heavy. And it's ran from like 7 to like 13, but it's something like 65% retail owned. Do you know what I mean? So, and then the rest is insider and like 3% institution. So the problem is, when people are are buying it up. It's hype because the share float's so small.
Small, yeah.
It makes the price run, but and what people don't understand is, oh yeah, but if it goes to 15, I can sell. No, because there's got to be somebody buying at 15 to have those shares off you. And this is what I was looking at about Wrap. I've been doing a lot of watching on it and stuff, working out is the order book is so slow. So slow. So if you've got 100,000 shares or 50,000 shares, yeah, you might list them, but you ain't getting the price that's on the screen. It's going to keep going down and down and down, and you're just going to, do you know what I mean? So it's all right making sure you're in there, but you've got to make sure you got exit liquidity. So otherwise, you're just going to get stuck. And I know a few of the lads have made some really good money off Nuke, to be fair, and it does look promising if they can. They've got like 15 acquisitions that they've got on the board, but obviously none of them are over the line, and that's great if you can get them done. But
yeah,
that's why I looked. It's on my watch list. I'm waiting until next earnings because I'm not just going to gamble into any stock that anybody's following and stuff. You've got to make sure. I had a guy messaging me on Discord this morning. He was saying, "Oh, Jay, I'm going to hold these stocks for 20 years." And I said, "That's the right mindset, but you've also got to be prepared to get out on next earnings if it's not good. So you've got to have it both good on it."
Well, that's like me with Marks and Spencers. Them next earnings are going to be shocking because I've lost 300 million in revenue with a cyber attack.
They're the same people that took out Jaguar Land Rover, isn't it?
Yeah.
But it's through the same integration that they use or something, doesn't it?
Yeah. So when I joined Greg's, obviously the co-op had been done, Marks and Spencer had been done, and they just cut off all legacy software, and now everything's like the security is like proper strict on what we get in. So apparently they've had quite a few failed hacks as well on big retailers. But one of my friends works for Jaguar Land Rover, said he had to go in for a month and just stand there and do nothing because they switched the systems off.
Yeah, there's do you know who Mark McCann is?
No.
So he's a car YouTube guy more than anything. And obviously he went into detail. He actually got in touch with one of the hackers and spoke to him and stuff. Yeah, so but it's crazy with it. Jake's asked a question here. I'm interested on this, John. If you've got 10K, where would you put it right now? Do you want to dip? Where are you putting it? 3 stocks, John. Where are you putting it?
3 stocks. Grab.
Ooh.
Novo Nordisk.
Ooh.
And would I open a new position?
So you got Grab, Novo, and what you going for on your third? John just likes giving money to people by the sound of it. Novo just dropped out now from a fat loss drug cut or something.
Yeah, but they have just had a positive trial for an oral version.
I hate healthcare. It's stressful stocks the whole time.
Yeah, it is. Cutting 5,000 jobs as well, I believe. I think I would go for Marks and Spencers.
You're 3. If I had to pick 3, we're going Ondas. We're going Ondas, probably PayPal, because I reckon there's going to be some money there. Then go for something a little safer, probably Nvidia or something.
Well, I was thinking my nuclear ETF because I just think that's the way.
Yeah, forward. Will Johnny's equity liquidity. Yeah, trust me, really is. But yeah, no, I think AMD's due a bit of a pullback. I'm not saying it's not worthy of where it is, but I think it's ran a lot again. I don't think Q3 is going to be amazing for it. Nvidia, it's hard for Nvidia to have bad results because that's just not Nvidia. It's Nvidia and half of the industry because they supply so many people with so much stuff and they've got so many assets on the balance sheet and so much stuff that sometimes it's going to be that way. But AMD, I think, are going to have a struggle Q3 because of all the China restrictions and stuff. And I think you might see a little bit of a pullback, but as a long-term stock, yeah, it's going to be fantastic.
Do you think AMD over Nvidia long-term? Or do you think it's just going to constantly be like a 60-40 split and there's always going to be one that's on top of the switch?
I think AMD is going to start diverting more into data centers as they go down the line. I think that's what they're going to start doing a lot more of. But I think on a chip aspect, I think NVIDIA stays above them for a long time, but it can change real quick. But I think NVIDIA is, and I think that's why I think with the OpenAI deal, they had to give them 10% of the business through the warranted shares if they hit so much. I think AMD had to give that to get the deal. I think it was there. I think personally, that's my opinion. I think AMD. Like I say, though, AMD is an absolute powerhouse, man. It's been slept on. I mean, people, as soon as I sold my shares and it went up, people were commenting all over my post going, look, you've got it right. And I said, mate, I said to him, listen, I bought my AMD at 70. I ain't buying it at 170. I'm buying it at 70. I've made 100-point profit on every share that I hold. Why am I not going to sell it? I said, it don't mean it's a bad stock because someone sold it and put it into a new play. It just means I don't think it's going to go much higher, and it has, which is great, but doesn't mean I didn't sell at a loss. Sold at 7-8 grand profit, I think it was, or something.
Well, I had that with Microsoft. I sold mine for like 30% or 20% profit, and then it's run up like an extra $100, if not more, since then.
Yeah, and this is the thing. What people don't understand as well, you can't marry a stock, man. And Ben's a great example with like SoFi, for instance. He says that SoFi is going to 100. That's great. Everybody's visions are great and different, which is fantastic. But I only ever seen it going to 35, and I do think it'll go to like 50 now. My target is looking around 50. Once we get to 35, I'll trim some. But that's what I mean. You've all got to have different. Just because I set 50 and I take so much profit, and then it did run to 100, it didn't mean I got it wrong. It just means that we had different goals for what it could be. It's like Palantir. Palantir is another great example. I bought Palantir at 70. I sold it all of mine at like 130, I think. Now it's a lot higher. Doesn't mean I got it wrong. Made lots of money.
I think this is what I always look back at as well. Obviously, when I first started investing, I sold all my shares. But for me, it was the right time to sell all those shares. I made a profit overall. So it wasn't wrong that I sold it. Yeah, Rolls Royce is now worth £11 instead of £3 when I sold it.
Crazy, yeah.
But at the right time, it was the right thing for me to do, was sell. And I was happy with that profit. And that's an important thing to remember.
It's the same with Ondas now. I try and preach all the time to people without trying to advise it by that. But trimming is so important. And I actually wish I trimmed more 11 than what I did. I only trimmed 1,000. I don't want to get rid of my position too much because I want to keep it and I know where it's going. But I should have also seen what was going to happen. And I think I was a bit naive with it. It was due a little bit of a pullback. I do wish I took more shares as I was trimming, maybe an extra 1,000 or 2,000, not like an extra 8,000, like an extra 1,000 or 2. I do wish I was doing it, but and I just wish I would have trimmed a little more. But these are lessons that you learn going across. My average is still really low. I'm still up by like 80% or something stupid. So I'm still.
What did you say that going
to? Me personally, I think it's going to. I think it's hard because drones are the future. So if we're talking on a 5-year scale, it's going to be at 20 plus easy. And if they keep executing how they are and the market can keep dominating and keep growing, there's no reason why this can't be like a 50 plus stock in 10 years. Because drones aren't going anywhere. It's only just going to become more of a thing. And these guys are well ahead of the game. People just think that it's drones as well. They're missing a big point. They're massively in networking for the trains as well. And they've got a 16 dot, I believe it is. I'm not greatly clued up on this system, legacy system that the government need. Not want, they need it. And they've got it. So in my interview with Eric, he literally said in 6 to 12 months, you're going to see a lot more movement on the network. So if people picked up on that gem, they should also know that in 6 to 12 months there should be. And there's $1 billion revenue up for grab there in just that system as well. And then we've got to start, like I say, you got to start looking at all the arms of the business. So just one of the investments they did, they bought their shares at $2 a share when they invested into the company. Well, that investment alone, I think it's 2 million shares. It's now sitting at 3 or 4. So they've already made so much on that one alone. Now, their full year target for this year was 25 million, I think it was. Their money that they've got in the accounts making that on interest. So, you know what I mean? You have to start taking these things into consideration, but it's important that they keep up with the growth and the licenses and stuff like that. So, but what else is I saying? It's not about share price, about market cap. That's very correct. As long as the company's still growing, that's what I don't get. Shouldn't it be climbing each month? NVIDIA. Oh, he's on about NVIDIA. Oh, yeah. And this is another thing about what people don't get about NVIDIA, but especially if you just start doing investing now. The share price might be, I don't even look at the share price. What's NVIDIA's share price nowadays?
190, roughly.
But what people don't actually understand is at 183, the share price isn't actually 183, is it? It's like,
yeah, it is. Oh,
no,
right.
But I mean, like, because of that stock splits and stuff. When you unsplit it all and stuff, it's actually the value of the company if they never split there, and is a lot more than 180. But people don't obviously know about all those stock splits and stuff when they're buying into it now at 180. I still think it's crazy. Nvidia's run is the fact that in 2023 it was 28 a share. I don't like this new look on Trading 212, by the way. I preferred it how it used to be. I'm going to message him and tell him to put it back.
I haven't made my mind up yet. Jake has said opinions on if we stay in a bull market until next presidency.
Well, I mean, so there's an interesting chart that I come across the other day. I'm going to just pull it up for myself real quick now.
Put it on the screen if you want.
Yeah, go on then. Share screen. Should be sharing now.
There we are.
All right, let me just zoom in on that real quick. Let me pull that over here. So it's harder when I ain't streaming and it's on the other screen. Let me load it up. There we go. And this shows each fourth year of like a bull market type thing. And as you can see, look, normally the fourth year is always full of red. You see how there's red on the fourth year?
Yeah.
Of every bull market. Well, this is where we are now. And obviously, we're not in a we're not in a bear market, are we? We're in a bull market still, so it's proper through off what normally happens. Do you know what I mean?
Yeah, that's quite interesting. I'm just reading that whole chart.
Yeah, okay, like I say, I bookmark all this type of stuff to come back to. So, but you like I say, since 1950, we've had 7 bull markets and have reached their 4th year, delivering an average S&P gain of 12.8%. So that's on the average of what's happening with the S&P on the 4th year. Sorry, that's what this one is on the bull market. So I think where are we up on the S&P now so far? I think it was like 15% last time I checked. Obviously, it's come down a little bit now.
But yeah, it is. I'll check quickly. Will probably knows it off the top of his head.
Yeah, Will definitely knows it. Yeah, like Will said, Nvidia's 83,000 without a split. £83,000 a share.
That's crazy. That's wrong.
But yeah, as Jake's saying, opinions if we stay in a bull market, it's hard to say because there's so many variables that you have to put into that. But one thing, in my opinion, that I feel is we're always going to have a good market when Trump's around. It's important to his legacy that he has that type of thing. He's all about legacy and stuff. And I think in the long term, there was a graph somewhere, I haven't got it to hand, that Trump, it's his 2nd year of presidency where he has the biggest S curve. So, but obviously,
we've not even seen a year, have we? 13.5% year to date for S&P.
That's what I'm saying. So obviously on the 4th year, it normally says that it finishes around where we go. Oh, I don't know where it's gone now. Bookmarks. It's down there somewhere. Yeah, so normally, like so, about that percentage. So realistically, this is where we finish for the year on an average of the past. So it's crazy that year one's always the busiest. But like I say, how do you know when a bull market starts and when it doesn't? People might even say that we wasn't in a bull market before this. So for this year, everyone's opinions are different, aren't they?
I know, and I would say I'm definitely more on a pessimistic side.
I just think it's hard to say when it stops, really, because there is a lot of stocks that are running hot. This one was important as well.
I'll put it back up. There we are.
I don't know if you've seen this. Basically, in 1987, the stock market had the worst day in its history. Both the S&P 500 and Dow Jones had the largest single-day percentages lost in history. S&P was down 20.5%. The Dow Jones was down 22.6% in one day. That's one day. I mean, it made me laugh. Commented underneath, and this is how we feel now when the S&P goes down 0.3% in pre-markets. It's right though, but that's what I mean. Like, imagine if this is a crash. When people say a stock's crashing or a market's crashing, this is a crash. 3% or 5% or 0.5% or something. People are just not used to the market being down anymore. And I think
you know what it is? I'd love to be reading Trading 212 forums during that day.
Yeah, it's criminal that place is.
I get There's some good stuff on there
every day. Because the uncertainty of the future president of the market hates uncertainty. Let me put that back over there. Is there anything else you want to share, John? Is there anything that you got fucking that you want to
share? Not really. I've not been looking at any new positions, if I'm honest. Our biggest one is that PaySign Inc. that I really wish I got into, and I still think is a solid business. The issue, well, it's healthcare related, so you're not going to like it either way. But it's a finance company that facilitate like payment cards for like healthcare. Is one of the bigger markets, and the fundamentals of it are quite solid. But
which one's that, mate? Do you want to pull that up?
Yeah, I'll pull it up. It's called PaySign Inc.
Someone just commented on one of my posts on Trend 212 saying crash with the lines on it. What's this bit like a payment processor?
Yeah. So the way this, I'll read the about because I don't know how to explain it properly. So they have prepaid card products and services for corporate, consumer, and government apps, but they're heavily in like the healthcare for like plasma donation in America. But there's currently like a over supply of a plasma in America. So obviously, if they're going to be buying less, there's less going through their cards. But yeah, it's just an interesting one, and the board are actually quite experienced. But if you look at the fundamentals, really, or the growth, I'm on the wrong one. They're just growing at
a revenue growth, yeah,
healthy rate. The cost of revenues not really going up as much as the revenue itself. So yeah, I need to do my further due diligence on this, but I've been watching this since February and not got back around to doing it further.
That's the problem with my watch list. I see some of the stocks that I was doing due diligence on, and then I come back to them. I'm like, yeah, I wish I got into that. Jake's asked a good question there, John. 5 main things when looking at DD, i.e. CEO as one of them. So I think the 5 main things for me, obviously the most important thing is the CEO always. Don't matter what company it is, if the CEO's scrap, then the business ain't going to perform. Secondly, after that, financials, obviously, is a massive thing for me. It's a key thing I look out for. I don't like I say, I'm in one company that is riddled with debt, but that's a speculative play for me. Normally, I like low debt. So there's room for them to fight, like take out extra to grow. News, obviously, you're looking for catalysts. You're looking, where is the business going? Have they got any new contracts that you're not looking at? Do you know what I mean? Weebles are good for that as well. You can pull all the news chatting up. It's great. Future growth, obviously, fun goes into that as well. So that's the type of stuff you're looking at. Yeah, that's 4 of the main things. And then so I've got trying to think of
mine's not far from yours. I'll always look at the senior leadership. CEO is important, but I also look at the people he's got around him, because the smartest person in the room is always the one who's put smarter people around him. Then I'll look at the finance. Debt is one of the first things I look at. And then it's the market for me. I need to know where that market's going, because you could buy a growing company in a dying market. So really you're limited in that aspect. News, which isn't quite fun for Novo Nordisk, because it's always positive then negative the next post. So yeah, that one's quite fun. Fifth.
And I bet that's what we would see. I've got a vault here that I've set up with a couple of the lads that at the Discord. There's 1 or 2 lads in here, and we put all our stuff in here just so it don't get lost as well. And some of the things that we look at when we're doing due diligence is CEO leadership, news, financials, partnerships, basic info, key catalysts, risk and red flags, earnings, presentation, valuation, and PT. That's normally the category of how we break our stuff down. The presentations are huge for me. If a company don't do a stock presentation, I don't care how good it's growing. I ain't interested.
Do you know? That's interesting. I've never
got to
thought
have
about
a good
that before.
presentation. Like it's got some of my favorite things to go through. 13 Fs, earnings presentations, and stuff like that. They're the types of things that are some of my main things that I really like to go through.
So will you sit and watch every call, earnings presentation call?
Not the call, presentation.
Okay, yeah. I'm just I was thinking
my stocks. I'll listen to all the calls, of course. Like I think that's what's good with Finch Tech AI, I think it is, or something. There's a Fiscal AI.
Oh, right, yeah.
Yeah, so you can get a summary of the call. So it'll read the call for you.
All
Give
right.
you a summary. Yeah, I don't like to listen to the robot voices, the $1 billion companies with a £20 mics. Oh, it
Alpha
drives me
Spread
mad.
does that as well, by the way. Sums up the earnings call. Don't think it does it
Oh.
doesn't like say it back to you, but it splits it down.
Oh yeah, that's what it does. Yeah, so I mean, earnings calls for my own stocks. I'm always on the ball with them. Like, so I listen to them. I put them on. The BBAI ones always make me laugh because you don't take no questions at the end. Kill it.
Did it not?
No, it's funny, man. They never ask questions. So here's Chow, which is one of the guys in Marvel. Like, so there's me, Chow, which is in the server. He's got a different name on it, and then Dark Talks. I think Dark World. I think it is, whatever his name is. So there's three of us in there at the moment. It was more what I was doing for my personal level, and Chow jumped on it with me as well. But I agreed on a good earnings presentation. Clear and focused communication with investors makes a big difference and shows the intent within that company to engage with investment. Yeah, it is, and that's what I didn't like about Hive. Theirs looks dead childish, but the numbers are there, so I'm happy for it to do that.
To be fair, I haven't looked on DAS, but obviously I see what you're sharing on Twitter. I see what Brad's sharing on Twitter, and the conversations they're having. And I'm dead impressed with the communications that they've got between investors or just the market in general or whoever's following them. I think it's dead sophisticated. And the fact that they're willing to jump on and do interviews with you as well, it's insane.
Yeah, someone said it to me. I'm gonna have to jump in a minute though, John.
Yeah, that's
people
fine.
say it to me all the time. They say that some guy said it to me the other day. He says, "Oh, but why is the CEO talking to small fries like you?" And I was thinking about it, and I'm thinking, because you might think that only I benefit from that, but trust me, they benefit from it a lot. Because, like Eric was saying in the interview, when he did that interview with me, do you think it was just a load of little small people on YouTube watching it? It's not. The big institutions will watch that video. They'll have one analyst who does a rundown and gets all the information out of it. There's got people who watch all that stuff, and it's sentiment. And like he said to us, when we share something on Twitter and stuff like that, it's not just for retail, because we know institutions are watching as well. So it's for everybody. So when there's good news or there's bad news, it's not just for Jay who's buying stock on his trading 212 account. That news is there for Vanguard. It's there for, do you know what I mean? It's there for everybody. So people sometimes are too narrow-minded.
You could possibly be on BlackRock's screen in the boardroom.
Yeah, they're like,
so we've had this presentation.
Commenting on my videos so they can get in my giveaways.
Yeah.
Right, John, I appreciate you having me on, mate. And like I say, I appreciate it. And good luck for the rest of the stream,
That's
mate.
no problem. Thank you for having me on. Enjoy your evening.
No, see you in a bit, mate.
Bye.
See you in a bit, chat. See you in a bit.
Is there anyone else out there who's got anything else to want to discuss or any stocks that they quickly want me to look into? Because I can run up till 8 o'clock. But yeah, just let me know. Like I say, I haven't really been looking into much more recently. I've just been keeping on top of my own investments, which I will share here actually. Oh. Let's go for that one. So if we look at how I performed year to date, oh, you want me to look at, that's actually on my watch list, AMPX, just Ampress Technologies. Let's have a look. Finn, if you wouldn't mind, let me know why you're invested. That's always a good place to start. I feel like if I can't explain why I'm invested to someone, then I shouldn't be invested myself. So I was quite impressed by I've actually looked into them and I was quite impressed by the investor relations of the battery. I did point something out though, is even though it's a better battery, the life of it is a lot less, like life cycle. Just trying to get the presentation up. But yeah, they are quite interesting. I can't find the one I was looking at the other day, which is brilliant. Oh. But if I look at the financials, let's see the debt. Obviously, they're going through a growth. To be fair, they don't have much long-term debt. They don't have any debt at all. So if I pull this up here, yeah, look what I'm looking at. I think they have many options to power different things, drones, RVs, etc. Yes, and they've also got electric scooters and stuff like that. No problem. Jay, enjoy the F1. But if we look at the recent report, year-over-year revenue has gone up by four times, so it is looking promising. I would probably need to wait for a few more earnings. I wouldn't jump on it early. I would need to wait for a few more earnings to see what they're really doing. But they've exited Q2 with no debt and 54 million in cash. Obviously, I need to look into this further, but really, I'd be wanting to know what they're doing with that cash. Jake has asked, what's the best website to look at for stock financials? So I always go to stock analysis and alpha spread as my go-to, and then I'll use Yahoo Finance as well. But I think alpha spread, see if I'll put in grab. Share my screen here. First thing I like is it gives you good intrinsic, well, not good intrinsic value, but you've got a value based on the current financials of what it's worth. Obviously take that with a pinch of salt. It can't be fully accurate. Cheers, ebook does have all the links you need. But these are my two. And then if you come down, split into financials, you can do trailing 12 months, quarterly or annual. It's the interface for me that I really like. And then if you go further down, you get to see all of your margins. So that's quite good. That's what I like about grab, not alpha spread, sorry. In terms of like Marks and Spencers, obviously you've got to really know your market for your margins and what stage you're in. So it is quite good. And then there's a few more features where you can look at analyst summaries, dividends, if that's a thing. It does rate them on the solvency score and profitability score. So if you do want something that just throws up some static figures to give you some base analysis, it is quite good. But if you want to dive deeper, use stock analysis. But as Jay said, his ebook does it all and has it all. So I'll show it up here. Oh, sharing the wrong screen. So if you really need a look, I'd go on Jay's channel and you'll be able to get all this. So if you look, it's got all the important information sites, and then this is where you go down to due diligence tools, stock analysis, just what I've said. I've not explored some of these yet, but Yahoo Finance is amazing. Alpha Spread is amazing. Fiscal AI is good on the times that I've used it. But yeah, that's it. And I think that's going to be it from me. So thank you to everyone that's tuned in. Enjoy the rest of your evening. and hopefully I'll see you around for the next one.